Welcome to Trading Lounge and the US stocks for the 12th of June. Today on Friday we cover Nike, General Electric and Atlassian. So I'm going to move through quite quickly today. I'm a bit short on time. Now this stock here has held up quite nicely. So let's just go in and have a little look at this. We were looking at this, completing this particular structure to the upside here. That's not finished at this stage. We're still looking for another move higher here. Not all stocks have to burn out. So let's just have a little look at the hourly chart for this here. Last time we spoke, we were looking at the move down through here as part of wave 4. So we had wave 4 either here or here. So I'll just, it still can be over here as well for this, because we can get an impulse wave out of this here. We were going to go along here. So what we do now is just keep it really simple. Then we'll go along on this point here if it goes higher at 180, and that will set our target at 200 at that point. So that needs to be triggered in. Now, I can't get into the tick chart here, so I'll just see what this looks like on a 5-minute chart. They're just so sketchy, that's all. I mean, this move down through here we could count it as an A and a B wave here, and then 1 and 2 and 3 and 4 and 5 here. A little bit dodgy, and I can't really get in to see that. And this over here, if I include the spike, I mean, normally when I look at these things, I see this run through here, and then I just go down here, and I tend to not worry about spikes like this because they can disturb the count. But, you've got to kind of include them as well to a point. So this move here looks like it's in 3 waves up here. So we looked at this as wave 1 and 2 here. Then 1 and ABC for 2 here. This has got, well, even 2 into this point here, 1, 2, 3, 4, 5. So that's very clear as a 3rd wave, so a 4th wave. So we could go here as, well, from this point here as 1 and 2 and 3 and 4 and 5 to this point, and then this one here would be 1 and 2 here, and all the way to 3 here, to 4 here to 5 here, giving it an impulse wave, and then seeing that ABC correction pull back here for this into right into the 61.8%. So that's quite good. But we know the markets are bearish at the moment. So, we don't want to go buying on the low here for this, even though that's possible. But this is just not clear enough to work with here. So I know that if we take out the top here, even this second top, I still like to be above 80 because we're in group 2 here. Group 2 is 80, 65 and 72. That's just the shell of the of this group here of 180. So I would only turn bearish on this, by the way, if the 65 became the resistance, and then that would set the target down at 50 at that point. So you could do that. If this became the resistance, then you could do that. And the resistance is, of course, the market comes down, goes back up, comes through here and has that first low below the level here. And that's the one that you want, because from this point, the market could just climb back up from here, as it does a lot, just tests lower for demand. But if it's not there, then this will drop lower from that point, and that's one that you catch. And that gets you safe most of the time, and when I'm saying most of the time, I'm saying sort of up around the 90% area there. So it's a good little strategy to use. You could also use it here as well. So I'll just point that here on that low here for that. Okay, so just to go back to the hourly chart here where we've got it labeled. If this is wave 4 here, then that makes that wave 1 and wave 2 here. Now, obviously in a situation like we're in at the moment, that can be a bit dangerous to look at here, but I'm thinking that you know, if that holds, let's just go, if that holds, then going long above, get on support here would be the right thing to do. Okay, so yeah, and dropping out of 65 here would be the short trade on this side, and at least you can get it down to, because there'll be support here anyway, and at least you can get it down to 50 at this, at the 150 at that point. I know that's really wide and things, but that's just the way that it can be played at this moment. You can go short under this one here as well, but just do it half a position and keep your stop from that high to wherever the low is, 61.8% above that. So, you know, around the 72% mark. So you do not want to overtrade. Okay, so let's have a look at General Electric. So we've been looking at a rally coming off the low there, because we can count 1 and 2 and 3 and 4 and 5 here for the low here. So we're also looking at this as being, well, it could be wave 1 up here, or the A wave, and then we're looking for wave 2 back here, or wave 2 or wave B back here, and then wave C up here. Now, if this market finds this level here, which is the medium level 650, so medium levels are always halfway between 5 and 8. Well, always halfway between, sorry, a little bit tired. So medium levels are always halfway between two major levels. So 9 here would be a medium level. The distance between these two here would be 1150. So that would be the medium level there. So what I'm saying here, if the 1150 here becomes the retested resistance, the 650, sorry, then the market's going to drop down to the 5 at that point. Okay, so we need that level. That's roughly about the 61.8%, 60 odd percent there, sitting on this level here for that, and that will drop down there. And if that's the case, then we need to look at this in two other different ways. So let's just have a closer look at the more bearish picture on this one. So we could look at it like this here as 1 and 2 and 3 and an A and a B and a C for wave 4 here, and then looking for a move further down here into wave 5 here, making a new low into the $5 area there. But we don't want to go short, because even if the market comes down to, which it should do, come down to the 650, you're going to see a bounce off that. So the setup would be that, if we can just remove that there, and you know, with the US stocks, we're looking at basically 1 and 2, and we're looking down for 3 and 4 and 5 with the US stocks, and then we're looking for an A and a B and a C back up here. So if we can pin those 5 waves down, then we can look to short at that point over here. But it'll be like, it'll come through here and then down from that point. So we may be able to get it through here as well. That kind of build in a few positions over this side to get to this side, if that's going to be the case. So yeah, we'll leave it at that for the time being. And Nike is the next one we're going to look at. So I had this a little bit differently before. I had this as an orange wave 1 up here, and we're looking for, well, this move up through to here, and then we're looking for a move down here. And obviously I think I've been talking about shorting it here as well. So if you are short, that's good. We can just copy that segment and put it there, and we'll just put a stop above that there. And we'll just see how that goes here for this. This doesn't count very well, I have to admit, with this one, but I'll just do some more work on it, but I want to line it up with the S&P 500. So we're looking at this to make a move. This is the 50-60% retracement level. So we'll be looking down lower at that stage. Of course, we would only go long here if this top was taken out here. That's where we'd go long from, but we don't have to worry about that. But just long as you know that, at this stage, but it's not there. So we'll just leave it at that point. And yeah, I mean, that might be the thing with people tend to overtrade a lot. Like when I'm trading stocks, I hardly use any money at all, and I have wider stops, and I find that to be much more successful rather than having, putting a lot of money on the table. I mean, I would never risk more than 1% per trade. So obviously the 2% that's written in the books is not really going to, you're not really going to survive on that very well unless you really sort it out. But so 0.5% or 1%, because most people have got small accounts, and that can keep you quite safe. So definitely want to keep the stop above the closest largest number at this stage here, above here, because I mean the other thing too with stops, if I can just say this, like this could be intraday as well. Okay, so if I was trading this intraday down here and the market came back up and retested this, what they do sometimes is they come up and hit it, of course, then they'll come up here like this, and then they'll test that higher there. So what I always do is I wait for that point to come into play here, that high there, because there's a chance that they don't. First of all, the market coming up to the 100, there's a chance that it's going to fail. There's a 50-50 chance that it could fail or could continue higher. If it's going to continue higher, you're going to see a bit of a pattern with this anyway. So you're going to see that classic trading levels pattern as such here, and it'll be something like that. So it's either going to fail from here and move back down, or it's going to move back up at that point there. And then you can bring the stop down to the second high here. So this is intraday trading, this is any trading, and it's just a logical way to step through it. And then if that gets triggered, well, then you may as well be on the long side from that point with a stop under here. I have no qualms in just swapping sides straight up, So that's our robo method 1. So yeah, okay, I'll leave it at that. Thanks for tuning in. Sorry I couldn't give much more time today. It's been a long haul, and I've got other things to do as well. So alrighty, cheers.